Hey everyone, David Oliver here of the Tax to Save team, and thanks for joining us for a phenomenal week here. A great case study we're gonna dive into this week of some newer clients that have started working with us in the past year. And this is going to be a fun one. This is going to be one, folks that are listening and maybe that are newer, right? We always review a tax to save case of the week of current, present, and past clients that we're really able to help, as well as new clients that take on our services here at Tax to Save. So if anything's are new, please check out our content at taxtosave.com. We also offer at taxtosave.com a free complimentary tax discovery meeting with us and our team to see if we can really be a fit for you in some of these similar to these case studies that we'll dive into today. So, like I said, this will be a fun and exciting one. This is a great couple out of Georgia. They're both successful physicians. One physician, the husband there, is going to be a 1099 business owner, and then he's going to make about 650 grand this year. The wife is just recently graduated, also a successful physician now, and making $300,000 a year. So, to combined income, folks, this week's going to be about $950,000. This week's focus, though, is really about getting more of your cash flow back rather than sending it off to Uncle Sam throughout the given calendar year, this year being 26. So what does that look like? Typically, if you're W-2, 1099, right, the paychecks, the quarterly payments kind of eat away of what you really make, right? It's not about what you make, folks, what you take home, as we all know, right? Tax man, Uncle Sam's the man deciding that. So with that said, what was this client really able to achieve? Well, they chose two great strategies that we'll share here in a second. So it's a two for one. One provided great cash flow, the other one provided better even savings of tax and using depreciation in Section 168K. But the big thing here for everyone listening is how we were able to change for the husband is with quarterly payments on what he pays in of expected tax for the upcoming Q2 quarterly. And then for the wife, how we're able to impact and change her estimated withholdings. Right? So we were to keep back more of what she was making, keeping larger paychecks rather than have to wait for a large refund all the way sometime in hopefully mid of 27 if we're lucky. So that said, I'll go ahead and share my screen and we'll go ahead and dive right on in. And so here you'll see our tax calculator, and you'll see that, like I said, they have $950,000 of income in the state of Georgia, married, filing jointly. And so right now, they're facing $317,000 of state and federal tax doing nothing. Well, what do? They chose a few great strategies. First one being the equipment leasing one. It's a 10-to-1 deduction. It just came back, folks. And that's one we definitely want to get our guns on our horses. We always run out of equipment. So timing around these things is key, right? A lot of our clients missed out last year, so they're taking full action this year. It's the loan process, a lot of things that we work hard to get our clients achieving of this business model. So that said, they were able to put 10% down, 40 grand, 90% loan to value finance to acquire $400,000 of deduction. The next thing they did, right, especially capitalizing on an asset class they had conviction in and belief in and experience in, was Bitcoin, right? And Bitcoin has come down a lot since its highs of this year or past year. It was at 126 grand, hit a low of 60,000, and who knows where to go, but they believe in the asset class. And so what they like here is the fact that they're now stacking Bitcoin with their Bitcoin mining business. They invested 70 grand, and that 70 grand is doing about 15% per year paid in Bitcoin, right? So getting it at a lower value, right? Same amount of Bitcoin, just a lower value. So lower dollar cost averaging inventory, which is what Bitcoin mining really allows for us, for those that believe in it. So they're really taking advantage of that. They see the appreciation side of that down the line, especially rather than sending those dollars over to the tax man. So that said, right, 10,000 was their total outlay. Their tax savings, you can see now after on the screen, right? We go from, again, that 317 now to $124,000 of tax. Really, their true savings about $192,996 of cash they now get to keep. So how are we helping them recognize that right away? Right. So again, everyone's situation is different, folks. So if any of this is of interest, how can you start what I'm about to share with you here? Keep more of your tax dollars from withholdings or quarterlies that are estimated to do here in your pocket. Again, reach us at taxessaved.com. That's taxessaved.com to see how we can help you. So how do we help this client? What we had them do is for the business owner, physician, we had them go over and we made an estimation that we do not need to pay in about $48,000, almost $50,000 of taxes on this estimated payment him and his wife will have. So for him, since it's more convenient, he's paying quarterlies. We had him hold back 50 grand and keep that as an investment where he's going to direct to not have the government get another bite of the apple again. So that was the first thing. And the wife will help change her withholdings in the following quarter so she gets to keep more of her paycheck. Think about that, folks. If you could keep, right, $192,000 knowing in 1 year, earlier in the year, let's say 100 of that right in the first 2 quarters of the year. Think about what 100 grand can do compounding rather than having Uncle Sam sitting on your 192 grand already blown away. It's the power of timing, the present value, folks, time value of money when it comes to taxes. And so we love to get a head start with you, just like we did with these clients. So any of that's of interest, stop sharing my screen here. All right. We achieved 182% return on tax for those clients, folks. To see what your return of tax could look like, again, everyone's circumstances are different. The timing is the greatest impact variable we can control. So please learn that today at taxessave.com. Reach us at taxessave.com to book your own complimentary tax discovery meeting to see how we can help you before the year gets away and you miss out on what you could have saved. Thank you. We'll see you there.